Hi, it's Wayne from truthaboutmortgagerates.com here with another update on what's happening in the mortgage world and mortgage interest rates. Well, last week we saw the Fed come up with another big announcement that they're going to be allocating another $750 billion, again, billion dollars, out into this year for purchasing mortgage-backed securities. Now, as you know, back in December they announced they were funding $500 billion through the first 2 quarters of this year. Basically, going through June, they're going to fund $500 billion, which means they had to spend about $4 billion a day. Now they've been spending that, and then lately even a little bit more. And now they've committed another $750 billion. Now, really what they needed to do this for is to continue to keep rates down through the rest of this year. Can't look to have a housing recovery if, interest rates after June start going up again. Because the housing market hasn't been recovering all that well, even with interest rates been this low. Now, some of the news that's come out of that is, oh, that's going to drive rates down to 4%. I think that's completely wrong. Now, could they get there? Well, yeah, I guess everything's a possibility. But realistically, the Fed has already been purchasing, again, 4 to 5 billion per day. Anywhere somewhere between 20 to 30 billion a week. Now, different coupons they've been buying varies depending on what kind of effect it's having also. But this $750 billion is not to dump all in now. It's to keep rates down for a longer period of time. So it's not going to drive rates down that much lower. Now, it did have an effect that day that says, oh, it's going to drive them down because people thought, okay, it's going to be there longer. But ever since that day, last Wednesday, we've seen rates move slightly higher again. Again, they continue to start to sell off. So it didn't create this first move down and then just keep on going, as some people have said last week. Again, they're completely wrong. But you have to understand where interest rates come from. Again, coming from mortgage-backed securities. And the why the Fed pumping this money, why they're even doing that to keep rates down is, more money buying something always drives the price up. When the price is higher on a bond, the rate is lower. Basically, that's where interest rates come from, in mortgage bonds and mortgage-backed securities. So that's just kind of functionally what has to happen. So when you see that, again, they're driving the prices higher, but they've been doing that for the last 3 months. And in the last 3 months, we have not seen rates dip down into the mid-4s. Obviously, you're paying a bunch of points and get it there, but the standard rates people looking at have been hanging anywhere around 5 or even higher than 5. So they've been pumping all this money in, and all it's done is keep rates at that level. So if they continue to do this, it'll keep rates at that level for a longer period of time. They really would have to pump in a lot more money to see rates really move considerably lower, because the Fed can't be the only buyers out there. Other investors have to be willing to buy at those prices and again, those low yields. And so far, they have shown that they have not been willing to do that. So it's going to be very difficult to see rates really move considerably lower, especially for any period of time. Maybe you get a day or two here and there. But for a longer period of time, it's highly unlikely to see that happen. So that's really what has gone on with the new Fed program to pump in another $750 billion. Now, there's other programs, things they're looking to do with the government and stimulus packages. We'll talk about that another time. But that's it for the update today. Rates, again, have moved down. Not looking for them to move a heck of a lot lower. But we'll see as things progress. Again, this is Wayne from truthaboutmortgagerates.com. Go check out Truth About Mortgage Rates special report. Gives you all the details about really what goes into all of this happening. Till you next time. Bye-bye.